you have all these stablecoin issuers, right? You have Circle, Tether, Mondo, Hashnode, Agora, Zero, all of these issuers, and they all want distribution, and they all want to go direct to application developers for their stablecoins.
That's Yelina, CEO of Noble, whose story begins amid the ruins of Terra's $40 billion stablecoin collapse. What started as bringing USDC to Cosmos has evolved into now what she calls the Shopify of stablecoins, a platform where issuers can distribute their assets across dozens of applications. Their USDN stablecoin introduces what they call composable yield, creating powerful economic flywheels by letting applications redirect treasury returns to themselves or their users. Here's our episode with Jelena from Noble. Season 4 of Stableminded is powered by M0, the stablecoin platform for builders. M0 recently crossed 230 million in native stablecoins minted, helping builders turn payments from a cost center into a core revenue center. This season, we dive into how companies like Cast, Playtron, Wormhole, and others fit into this dynamic ecosystem. With M extensions, builders can fully customize their stablecoin programs, and with their orchestration APIs, builders can scale minting and redemption freely. Tune into episode 1 of this season to meet Luca and Greg, co-founders of M0. Stableminded is for informational purposes only and does not constitute financial advice. All right, Yelena, thank you so much for joining us. Welcome to Stableminded. How you doing?
I'm doing great. Thank you for having me.
So excited to get into this conversation about Noble, what you're building. Before we hopped on here, I was looking into what I like to do when I host these podcasts to see like what's actually the newest update from the founder or from the team. And I was looking, looks like you all have been traveling. It looks like in South Korea recently and announcing some exciting stuff. So pumped to dive into the app layer and all of that good, fun stuff. But why don't we start first with your intro, a little bit about you, a little bit about Noble, especially for those who might be meeting you for the first time.
Yeah, definitely. Thanks again for having me. And yeah, excited to be sharing the Noble story maybe with folks that, aren't familiar with us. So I'm Yelena. I'm the co-founder, CEO of Noble. I've been working on Noble for about 2.5 years at this point. Prior to starting the company, the project, which is my first company that I founded, I was working deeply within the crypto ecosystem, specifically in Cosmos, on a lot of go-to-market product development, marketing initiatives kind of across the stack. So Cosmos, for those that are not familiar, is a ecosystem of what we call sovereign blockchains. So the original Cosmos vision was that applications should have their own dedicated blockchain infrastructure that they should be able to kind of occupy and build upon. We now know this as the Appchain thesis. The Ethereum ecosystem has gone down this route of kind of the L2 kind of roadmap, also the roll-up centric roadmap, right? It's this idea that applications should have control over their block space. But of course, Cosmos was kind of the original innovator of this idea. Regardless, I was very involved kind of on various initiatives within that space. Before that, I was also working for a number of other protocols, again, like very deep in the weeds across the stack. And I also co-founded a lobbying organization in Canada, kind of doing advocacy for the crypto and Web3 space in Canada. I'm Canadian. I now live in New York. So yeah, very, very diverse kind of career so far, but found myself working on Noble because of like one kind of origin idea. Typically founders like either have like, they like whiteboard like 100 different ideas, and then they're like, I'm gonna like go all in on this like one idea, and like that's gonna be my business. For me, it was like only ever really one idea, and it was always stablecoin focused, which we can get into. But yeah, it's been interesting.
It's amazing. So you were doing some go-to-market stuff at Cosmos and working with that ecosystem. Was that when you came across the one big idea, or when did that come to be?
Yeah, effectively. So this was back in 2022. So for those that probably remember, back in early-ish 2022, I think it was around May. So almost exactly 3 years ago. We had the collapse of Terra and that entire ecosystem. So there was a stablecoin called UST. It was an algorithmic stablecoin that was really never pegged to any real value. It was pegged to like this value of like Luna, which was like the native token of the Terra blockchain. And some folks don't know, but Terra was actually a Cosmos chain. And so a lot of the liquidity in Cosmos was UST, of course, this dollar stablecoin that was algorithmically kind of holding its value. And so when that all kind of went to zero, there was about a $40 billion market that just like evaporated effectively. And of course, led to FTX and led to many other kind of serious, catastrophic events. And so when that happened, I had this kind of like vision idea that we should have this purpose-built blockchain protocol that would issue stablecoins, but stablecoins that were safe, right? Stablecoins that were like backed by real value, that were kind of blue chip, that had like some sense of like kind of regulatory clarity. And when that happened, we approached Circle, kind of being the first kind of target partner. And we said, hey guys, there's this ecosystem. It's called Cosmos. We used to have Terra that was like dominating this ecosystem. There's a bunch of liquidity, a bunch of demand, a bunch of activity. There's all these applications that would really benefit from native USDC. You guys should like consider being, issuing in Cosmos. And so Noble was kind of designed to fit the needs of Circle, but we could quickly realize it would also fit the needs of many other issuers. So Noble became this distribution channel for stablecoin issuers across the ecosystem.
Yeah. It's interesting to think about the outsized role that Circle has played on a lot of these emerging startup concepts and companies that are continuing really who have now found PMF because of helping Circle solve problems early on. We were just talking with the Wormhole team who's going to be on this season as well, in like a very similar kind of, we were working with Circle on this problem type story, origin story. So on the point of algorithmic stablecoins, just on this, since you brought it up, Stableminded, this show and this brand for us is really, we're trying to help people navigate this conversation as easily as possible, whether you're a founder, investor, professional in the space. Like, we really want people to start being able in their mind to put people in the right space and have a framework for how they think about this emerging part of the payments landscape. When I think about the stablecoin assets themselves, and I'd love to make this a theme of our conversation, to really understand more around, when we talk about stablecoins, what they are backed by and how that could actually be dynamic. And that's not just a one size fits all thing. I've always wanted to ask this of someone who's been in the trenches of the whole Terra stuff, but when you actually break down simply why that fell apart or why that didn't work, compared to maybe what M0 has taken an approach of with backing everything to treasuries, for example. How, when you say algorithmic stablecoin, maybe just help us better understand what that means.
Yeah, so stablecoins like exist almost like on a spectrum. Maybe like spectrum isn't like the right like kind of visual way to map what I'm about to describe. Maybe it's more of like a quadrant. But if it's effectively, you can have stablecoins that are backed by like real value, right? Like cash deposits. Treasury bills are obviously the most common form of collateralization for the stablecoins that are the most dominant, whether that's USDT, of course, M0. What they're working on is actually an evolution of that kind of, call it V1 kind of model of like a like collateralized like stablecoin model by real world assets, actually, right? Like these are like real cash deposits or treasury bills like held in a bank account somewhere in the world, versus of course what you have kind of historically, which hasn't really panned out as much, which is the algorithmic kind of stablecoins, right? And so those are stablecoins that are backed by other crypto assets typically, right? They could be cryptocurrencies like Luna, and typically the way that they hold their pegs are like through like very complicated kind of like mechanisms that effectively modulate the supply of collateral of those cryptocurrencies based on like demand for the stablecoin. So if you're minting, if like a bunch of people are minting USD, there is like a smart contract, obviously that kind of modulates the collateral supply of that dollar UST value with a bunch of Luna. But then in the case of Terra, it could be others as well. But the difference is that those cryptocurrencies can be very volatile, right? Like they're not like USD or like treasury bills, which, in the case of treasury bills, like with yields, obviously like that can change, and like that can sometimes cause like liquidity challenges. But overall, like the way that those reserves are managed are a lot more safer and a lot more akin to honestly just like traditional kind of banking systems than something like an algorithmic stablecoin. I should mention like in the middle, right? Like there's like the traditional model of the stablecoins like backed by dollars, treasury bills, and then the stable coins backed by cryptocurrencies that are volatile. You also have where supply of that collateral like kind of modulates over time depending on demand. You also have like other crypto stable coins that are also technically backed by crypto assets, but that are safer. So like an example would be Rye, where technically you could mint like this dollar stablecoin called RAI with ETH, and that ETH is just like held there. Like it doesn't get burned or like algorithmically in the way that I guess like UST did. So anyways, there's different sort of, I guess, again, like mechanisms that are maybe more decentralized, but the trade-offs is that they're less safe probably and less scalable as well. So what M0 is doing is a really, really innovative model on top of this, like call it like safer model of the dollar-backed stablecoins by treasury bills or by cash deposits. And they're doing that in a very interesting way. So we could talk about that as well.
Yeah. On treasury bills versus cash deposits, I know for M0, I think they're exclusively doing treasury bills, if I'm correct on that. What have you, as you were thinking about just the infrastructure for Noble that we'll get into, did you see any benefits or downsides to even why treasuries would be better than cash deposits, even if we're on that part of the quadrant that's more secure?
Yeah. So first of all, the M0 model is technically it's over collateralized by treasury bills. So so they have like like 107%. So this like buffer of like, I don't know, 7% or whatever that's like exceeds like the total like supply of like M in circulation at any given point in time. And that's also just to make sure that if there is like a situation where a bunch of holders of the stablecoin want to redeem, like there are different durations of those treasury bills. So technically they don't all kind of expire at the certain kind of rate at the same time. That's kind of getting to the weeds of things. But for us, the M0 model was interesting because obviously T-bills do generate yield, right? And so if you're a Circle or Tether, this is like how you make money. So a Circle or Tether, they mint these dollar stable coins, but those dollar stable coins that you kind of hold in your wallet, they don't actually earn you any sort of return because all of that is kept by kind of a centralized issuer. And so, like, first of all, like that's a business model, right? Like if you can sort of start to offer that return or those yields to whether that's a distribution partner like a Noble, whether that's an end user kind of downstream of the distribution partner like our customers, that all of a sudden is very interesting, like in terms of being able to build products on top of that. So that's like one reason. But like more than that, treasury bills are just this like safest, most liquid asset right now that, I mean, nation states hold, companies hold, individuals hold, regardless of crypto and regardless of stable coins. So like as an asset class, it just kind of is like a perfect marriage. And I mean, to be clear, like the Circles and the Tethers of the world, they kind of like started this trend, right? And then what M0 did is they said, well, that model, like T-bills, like collateralizing dollars is smart, right? But like let's make it even smarter by actually being able to offer the ability for distribution partners like a Noble to tap into this kind of yield by and being incentivized to actually proliferate these stable coins to to a wider network. So yeah, M0 has this I refer to it as like a multi-issuer model, right? Like they're at the top, they have this protocol. It's like effectively a governance protocol. They have like mechanisms to kind of validate a collateral, post that on chain. It's like safe. You always know how many T-bills they have kind of amongst their partners that are actually like minting these stable coins. And then of course for distribution partners like Noble, we have the flexibility of saying, okay, well, now we have these dollars. They're very safe. They're collateralized by treasury bills. And this, again, in the same way that USDC and USDT are, but we have the freedom and the ability to actually kind of compose that yield in a way that makes sense for our community, for our kind of the products we want to build for our users, et cetera. So it's just a really elegant kind of evolution of like what we've seen with stablecoins so far.
Yeah, you use the word distribution partner or distribution layer. And when I think about this season, which I'm really excited for the world to start listening to, when I think about where Noble sits in this season and the role that I think you play, which is really interesting, is that a sort of application or distribution layer compared to some of the other folks who are in this conversation this season. So I'd love to better understand what you mean by that. And maybe this leads a little bit into what Noble is, how you think about it. It seems like you all, from just the outside looking in, are going through a bit of a maturity or evolution in terms of how you think about yourselves. So maybe it would be great to start just like how has it evolved in your own mind lately? Like, how would you describe what Noble is currently and then where you're going in the future versus maybe when you just got started? That might be a good way to say it.
Yeah, definitely. And it's a very accurate perception, actually. We are definitely going through like a maturity phase right now. So I'm glad that that's resonated. So yeah, a few things. I mean, we started off first, as I mentioned, after the collapse of Terra, bringing native USDC to this ecosystem of kind of dozens of distinct blockchains that all needed stablecoin liquidity. We partnered with Circle. We did a very, very good job kind of on the protocol side of things, making sure that that distribution of USDC and like that issuance was very safe. There was like, it was secure. It was easy for, these developers of these like other applications to like tap into this liquidity. One of the analogies like I kind of used in the early days when we were pitching a kind of Noble as like this issuance mechanism was actually analogizing Noble to like a Shopify, which actually like still holds up. So like I'll like quickly describe that. So you have like all of these stablecoin issuers, right? You have Circle, you have Tether, you have Ondo, you have Hashnode, you have Agora, you have M0, you have all of these issuers, and they all want distribution, and they all want to go kind of direct to application developers, to various sources of demand for their stablecoins. But it's actually kind of sometimes hard to reach those like end customers, and especially if like you're a newer entrant and you don't already have scale. And so what we sort of have said in the past is like in the same way that like in the early days, Shopify made it really easy for any brick and mortar business to go direct to consumer online without having to bootstrap a payment system and like building a website from scratch and like setting up all of those like infrastructure components to like have an e-commerce store. Like Shopify took care of that for you. That's what we did for the issuers kind of that we've worked with. Like we made it really easy to just go direct to application builders so that they could start using their stablecoins kind of like on day one. And so that's what we built initially, right? And like that was like what I call like the issuance side of the equation. So it's like, how do I get from point A to point B with my stablecoin? How do I make sure there's like, again, security, there's a proper UX, there's liquidity, all of these things. So yeah, we grew that to about $600 million of TVL and over $8 billion of transaction volume in the last year. So it's been successful. But what we quickly realized is like that's all good, right? Like it's important to have routes and like paths to various application builders, again, various blockchain sources of demand. But at the same time, it's really important to also actually be user facing and have experiences, products, and actually own that relationship like a little bit more. And so when we started working with M0 and when we started to like understand the power of Noble Dollar or of M, sorry, and then eventually, of course, our implementation of M, which is Noble Dollar USDN, we realized that that would allow us to honestly build applications that like either currently exist but are like not very well maintained or like don't have a good brand or like kind of adoption or don't exist at all because of like what we call composable yield, which like I can talk about it in a moment. But point being, we're still doing the issuance piece, right? Like we're still like very focused on making Noble like a very reliable partner to dozens of different applications. It could be, various like dexes, payments, different wallets, also a few NFT platforms, like various honestly various builders that sometimes we don't even talk to. Like that is like how permissionless and how like easy it is to kind of use Noble's like stablecoin issuance services. And yet we're now kind of maturing into this phase where we also want to make sure that like our services and our products are a lot more like customer facing. So like you can like kind of an experience, right? Like you can go to like app.noble.xyz and like either have that be the landing spot for like as an application developer to like tap into like, USDN's like liquidity. So it's like a little bit easier to manage, or you can actually like deploy an app like a payments app with Noble Dollar under the hood. We're becoming more application centric versus like simply like a service provider for issuance, which I think is exciting. But the issuance piece was really important for us to figure out because other protocols don't really necessarily maybe care about this as much, right? Like they just want to create like a little bit more of like a walled garden. They want to create a little bit more of a moat around their protocol. Whereas for us, like we didn't care about that at all. Like we just wanted, interoperability with as many applications as possible, make sure we're like, seamlessly, again, like providing this issuance service to all of these builders and see what happens. So that's how we started off. we succeeded with that. And now we're, as you said, like kind of maturing into the next phase, which is like trying to own this UI piece as well when it comes to the stable coins that we support.
Yeah. So if I'm understanding this correctly, and I'm looking at Noble's website as I'm asking this, like I'm on your website and I see you have products, which seem more like end applications or end experiences for people to get started with right now. And then you have assets, which are what sort of seem like the specific issuance partners that you've partnered with, the stable coins that, or the currencies that you've created in partnership with them. Is that a good way to think about it?
Yeah. Absolutely. Yeah. So we started off, that's how we started off. So we started off with supporting the dollar, the euro, bonds, yield bearing dollars like Noble Dollar. We're hopefully going to be supporting the yen in the near future. Again, there's also stable coins in the market that, are very up and coming, especially non-dollar stable coins, non-USD stable coins, I should say. 99% of the market is USD denominated stablecoins. It's a $240 billion market. That doesn't seem accurate considering like where the world is, right? Like number one, obviously the number one currency like in the FX market that is like traded and like is USD, but the second is the euro, the third is the yen, and it kind of trails off to smaller currencies. But the point is, the Great British Pound, all of these others, and the point is like those are not well represented on chain right now. So yeah, we want to continue doing that. We want to continue like issuing and listing these assets, but we want to make sure again like that there is utility for these stable coins in a way that we don't currently have. Again, like the euro is one of my favorite examples. Like it's really hard actually to get access to the euro on chain. And there's just not a lot of liquidity. It's expensive. It's like the UX is bad. And yet the euro is like a huge part of the global markets. Why are we not filling that, for example?
Yeah. Whether this is a question that is, as you think about the assets that you are adding, I'd be curious from the existing user base. I mean, you guys, you have volumes going through this platform that are really impressive. You have value that's locked in the platform. This isn't just some sort of new startup that's hypothesizing everything. Like you have existing customers and users. Maybe just speak a little bit about those and how the existing use of Noble Dollar or something like USDN has primed you for this future where what now seems to be, as you look ahead, you're really wanting to build a really robust layer of on-chain tools and products that are stable, like backed by stablecoins or stablecoin native. Well, just love how which is really cool. And I'm so excited to see this.
Mhm.
How has the existing customer base perhaps shown you the need for that?
Yes, this is a great question. Like we're always thinking about how like whenever we want to build something, there's always like a need. Like there's always like it sounds so obvious, right? But like sometimes again,
Not
like
everyone builds products that way. So
yeah, yeah, it's pretty funny, right? Like it sounds so obvious, like, oh, like somebody asked for this, and like if enough people asks for this, then maybe we should like build it. Yeah. So that's exactly it, right? We continue getting inbound on either feature requests, right? So like especially on like the issuance side, like that's a perfect real world example. In the early days when we started supporting USDC, obviously in partnership with Circle, we were one of like 8 protocols that like natively supported USDC. So it was like Ethereum, Solana, Arbitrum, Avalanche, Optimism, and like Noble or something. Like it was like only a handful. And like all of the USDC across those protocols were technically different implementations of USDC. And so you had to create cross-chain messaging standards to make it easy to send your USDC from one chain to another. You had Wormhole on the show. Obviously, you could think of this as like a bridge. For Circle, they wanted to do something custom. They wanted to kind of control those that orchestration, which obviously that makes sense. So they built something called CCTP, the cross-chain transfer protocol. Anyways, I won't bore you with the details, but when we implemented that, we were one of the first handful of protocols to implement that on Noble. We got all of this demand from our community to be like, hey guys, I want to go in one click from, let's say, my USDC on Solana to a Cosmos application without having to even think about Noble in the middle, where Noble is almost like a routing hub for the asset. And you don't even think about Noble and you still have the same asset. There's like no fungibility issues and so on and so forth. And so we built a module to satisfy that. And that module, that like feature has routed like over $2 billion of transactions. And the reason that this is like something I mention is because like it sounds simple, like, but I think like when you're not really listening to your customer like in an empathetic way, or you don't really like, you're just consider like thinking about creating your own walled garden or your own moat, you don't prioritize things like this, right? You don't like prioritize and say, you know what, yeah, we will support the ecosystem in like making Noble a routing hub or what have you. So anyways, I just like want to give like that one like little example because that's important for us. But as we scale, there's other feature requests applications that we get demand for, right? Honestly, one of those is creating a stable swap pool for the euro and the dollar that is better than like what you see in the market, whether that's Curve, whether that's Uniswap, right? And the important thing to note here is that other than like Curve and maybe like some applications on Base, there's actually not a lot of app builders that are like all in on like stablecoin liquidity management and like pools and like designing AMMs just for stablecoins. And like stable swaps, our type of AMM, they've been around for a few years now. But again, like having Noble serve as both a hub for hosting that liquidity, so hosting those pools of like, let's say euros and dollars, but also being a routing hub, I think is like pretty interesting, right? So if like I have my USDC on, let's say DYDX, and I want, for whatever reason, to swap that to the euro, and I want to take that euro to my MetaMask wallet or maybe to Base even for some reason, I can do that through Noble in one click at a very good price. So these are like the things that we're thinking about, like the applications, like the user journeys. And then you can imagine a world in the future where if we do a good job of building proper infrastructure for, let's say, stablecoin, so for this liquidity, right, for the euro and the dollar in this like swapping pool, you can actually build products on top of that, right? You can build a payments app where you're just going between the dollar and the euro on your phone, and you're like loading up your digital wallet with a bunch of euros that are stable coins and like tapping your phone on a terminal and paying for stuff. Like you should be able to do that. I've actually like said my dream is like, as like now someone who like lives in the US and like has USD like banking, I want to eventually get to a point where I have a digital wallet, I swap for the euro when I'm like on my way to travel, and instead of like using my Visa or like taking cash out, I can just like pay for stuff in Europe with euros and do that conversion at like the best price possible. Yeah. And we can actually do that at almost the perfect exchange rate as well. We've like done some research on this.
Can you add a little bit more color to the specific like end customers, end users, the industries? I know as I'm scrolling through this app layer update, it seems like you have big visions of like the variety, like the diverse ways that what you're describing could be used. I don't want to limit you here, but I also want to make this feel more concrete in terms of Shopify is a good example. Like Shopify is, if you ask Toby or whatever the CEO's name is, like
Yeah,
what they're, you probably know this, he's Canadian, right?
yeah.
Yeah. If you ask him like what kind of a platform he's building, it's a commerce platform. But Shopify very early on was really great because they were very clear also on like who their types of specific customer use cases were. How do you think about that as you kind of hold those in a balance? Like you have this huge vision of reframing money on chain around the world, but also trying to build a product tomorrow or today where a real company can go and start using it. How do you hold those two things in a balance?
Yeah, so I love the Shopify analogy and story because obviously the idea for Shopify came from like a pain point, which was like Toby was like selling snowboards or something, and he wanted a way to like sell snowboards online, and he like built like a website and was like, oh wait, like it's actually way more complicated than I thought. You need like payments and like infra and like hosting and all of this stuff, and then eventually realized, oh, like if we made this like developer friendly, other people could start like selling their goods, through like a similar kind of platform. And for us, we're not exactly taking those steps, right? Because we already have the platform where you can like start. Well, we will soon have the app layer, right? Where other developers can start deploying their stablecoin applications. But we are thinking about as well, like what is a flagship app that we could launch with on the app layer just to like get that momentum and get that enthusiasm for the app layer.
So you're almost saying like maybe you guys go build the snowboard
Yep.
company,
Yep.
almost going backward in that sense of showing what's possible. You're thinking through that.
Exactly. Yeah, exactly. For the app layer. Exactly. And so we are still in like the kind of design phase of this because, you can either think of it like two ways. You can either think of it like, okay, what do we already have that is getting a lot of traction? And could we make that better with stable coins and like again, like the way that we're designing the app layer or from a UX perspective, okay? Or do we do something that's kind of like new that no one else has really tried before or like seen it through to completion? And so we could go either way. The first kind of, if we were to take the first route, we are in a weird time in crypto where like the only things that right now product market fit are either like total speculation, like meme coins and like that kind of thing, like total gambling, total casino type stuff. Um, or there's like real businesses that are generating real revenue, like hyperliquids, like the hyperliquids of the world, and that's like a real product that people use that people pay for, and that's obviously on like the trading side of things, like being a perp stocks. So nothing like meme coins, but still at its core about speculation. Or we could do again something different that isn't part of like the meta right now, but that has obviously found product market fit elsewhere, whether that's like something like a fintech, like a product or that like already exists, but again, doesn't use stable coins like kind of for like under the hood or like stablecoin rails to kind of move money. And so what we've thought about on that front is potentially like a payments app that's like like privacy oriented payments app. So trying to like mimic almost like a cash-like experience, but with stable coins, digitally native, private, almost like a private Venmo, you can imagine, but that's like with stable coins instead of connecting it to your bank account or whatever. So again, like these are things that we're thinking about. And yeah, we're still kind of in the early stages of that.
Great. When you mentioned hyperliquid, as you think about companies in the space that are existing partners, other founders that you look at, or just projects that get you really excited around the future of this industry, I think in some ways the trenches that you're in and the perspective you have, sometimes when you I don't know about if you feel like this, but sometimes when you're just looking at press releases and X feeds and stuff, it's hard to actually know who's boots on the ground building really cool stuff and
Yeah.
pushing things forward in a way that's really, really noble. Who comes to mind? You mentioned Hyperliquid. What other projects are you following closely?
Yeah, I'm a really big admirer of the kind of almost like local, regionally focused like stablecoin projects, honestly. Like Lemon is like a really good one that is out of Latam that has gotten like so much traction with users. I mean, this is like a real it's like a real product that people like that average people use because I mean in like Argentina or like other Latam countries that are experiencing inflation, currency devaluation, obviously like their access to dollars is like very different than like a Canadian's access to the US dollar. And so people download Lemon as like a way to, kind of safeguard their wealth and to kind of like be like safe from their political reality. So that's like one that comes to mind. I mean, obviously like M0 when it comes to like more DeFi crypto native like stuff, right? For like builders like Noble, like we're obviously excited about. I'm trying to think. Actually, one of the companies that like I think is really admirable is also those that like are really trying to push the needle around the regulatory front and like doing cool stuff that's like kind of regulatory compliant, but like is like innovative on top of those like almost like outdated systems. And one of those companies is Monerium, who we also work with, and they are the ones that issue the euro. And they're really cool because they have gotten these licenses within the European Economic Area. So it's like the EU plus like Switzerland, Luxembourg, Liechtenstein, maybe the UK, I forget. They have a system where if you're in one of those countries, so mainly the EU, and you have a bank account, they have something called the IBAN banking system. And so you can actually generate an IBAN bank account with your self-custodial wallet when you mint the euro. So like right now on Noble, because we're supported, you can actually mint and access the euro, but when you do so, it's technically linked to an IBAN account with a real bank that's technically based out of Iceland. So that's like really cool, right?
Really
Like
cool.
yeah, yeah. Like I wish we could do that in the US, but we just like don't have the same guidelines around that sort of thing around like yeah.
I'm going to attempt to share this.
Yeah.
Can you see this okay? I've never shared something while we've been recording.
Oh, that's awesome. No, I can see it perfectly. And
Okay.
I'm so happy you brought this up. Yeah.
Yeah, talk us through this. Hopefully if you're just listening to this and you can't see this, go watch it on YouTube or Spotify, open your phone, but not while you're driving. We're looking at the USDN composable yield flywheel is what we're walking through here. But yeah, walk us through this.
Yeah, I'm really happy you brought this up. So this is really, I would say, the secret sauce of like what we're building with Noble Dollar. And to be clear, the reason we've been able to even formulate the secret sauce is because of like just how amazing the M0 stack is, right? Because USDN is an application on top of M0 technically. So USDN, kind of again, is a yield-bearing dollar stablecoin collateralized by treasury bills, and it's always pegged to a dollar, right? So in the same way that like USDC and USDT are pegged to a dollar, so is USDN. But the difference is you get passed on the yield, so your kind of principal always like grows over time. The longer you obviously hold it, and you earn the short-term T-bill rate, which right now is about 4.2%. So Noble as an issuance platform to other application builders, of course, we can pass on this like product, USDN, and other builders can actually decide how to compose the yield. So we call it composable yield. So in the way that you see here in like the flywheel, right? So USDN, we're partnered with a application developer. Let's say it's a payments application, okay? Let's say it's a payments application like based in LATAM, and they want to, give people access to the US dollar, and even more than that, they want to give access to people to this like real like safe yield. So here at the top of the wheel, you see that USDN, it's used by the application of stablecoin liquidity. Okay, let's say it's the payments. The yield then goes to the application developers, and they get to decide, okay, how do we split or how do we distribute this 4.2%? Those creators obviously decide how to distribute it, right? So you can decide as the builder, you can decide we're going to pass it all off to the end user. Or, you decide actually we're going to keep the 4.2% as revenue, because the more that this liquidity of USDN goes up or the adoption goes up, we get that 4.2% and we get to keep that as revenue, for example. The yield distribution, depending on how obviously it's distributed, it should theoretically improve the economics of the app, right? If you're passing off to the end user, that's incentive to keep, holding USDN. If you're keeping as revenue, obviously that is revenue that you can reinvest into the business, hire more people, improve the app, that is cash flow, etc. So the
It's awesome.
more that that's used, yeah, the more that it's kind of reinvested. It's a flywheel. Yeah, we're starting to kind of work with other builders to figure that out as well.
We love flywheels. What is, when you think about the companies, or maybe as you think internally about building the snowboard brand, quote, quote, what are when you think about the ideal flywheel, marketplace businesses, like who do you imagine if there's a founder listening to this or a company that's like, I would love to build with Noble. I'd love to give this a go. Maybe I'm currently using a payment infrastructure that's actually charging me for the money that's flowing through the rails instead of benefiting me for the money that's flowing through the rails. What kind of business models or industries or company types get you excited here?
Yeah, I mean, amazing question. I think we can just honestly look to all of the advancements that have made in like almost like traditional fintech or like neobanking. Also, even before that, like remittances, payments again. I mean, just the traditional kind of infrastructure that like enables these businesses, it's still expensive, right? Like even like look at, when you send a wire like to a different country from like let's say the US or Canada. Yes, the banks will overcharge you for that, but they also charge you because the intermediaries that they have to like cooperate with to like send that wire also charge money. So like every intermediary costs money. With stablecoins, you can do like a peer-to-peer, effectively like a peer-to-peer pairwise kind of connection to your end like customer or partner or user. So I look at remittances as an example. I mean, there's a lot of statistics on this, depending on which remittances corridor you're looking at, whether that's US, Southeast Asia, whether that's Europe to the Middle East, Canada to Sub-Saharan Africa, depending on where you're looking at in the world, there will be, I mean, there's always like exorbitant costs, but like sometimes it reaches like 15, 20, 30% of like the value of like how much you're sending. But like it's just like really, really awful. So if we can obviously replace that with stablecoins, you get rid of all of that. I'm sure you've had people on the podcast talk about this problem. So, I mean, those are kind of like the industries that would be great to replace. But yeah, Honestly, it's a huge, huge land of opportunity because there's just so many middlemen in global finance that for average people, they're always getting screwed over with the costs and by these intermediaries. So I think stablecoins, again, for like money movement, that's like instant, that can cost less than a penny. I think there's just the list of industries or services that can be disrupted is just like, I mean, it's huge.
Yeah, it's massive. While I'm screen sharing here and trigger happy, how should I think about this in the context of this app layer system? We're looking at Noble points here now, collect yield or points with Noble dollar. This, I'll sort of put you on the hot seat fastball here a little bit. When I'm reading this, all right, I'm accepting the cookies. Who knows what that'll do? When I'm reading this, I'm like, okay, this seems a little bit too good to be true. How does
Okay.
this work? Can you just like, how do we think about this? Sorry to give you a fastball as we close up
No,
here, but
I love it. So we launched USDN on May 5th, or sorry, March 5th. And when we launched USDN, we said, okay, how do we like stand out? How do we like do a campaign just to really get people like understanding Noble Dollar, excited about Noble Dollar? And we are crypto native, like as a company, and we are very DeFi native as well. And so what we said was, let's run a bit of a campaign, short-term campaign that is about points, but let's like gamify it. So this is kind of how the game works. I'll explain it. So as I said, USDN just by default earns you the short-term T-bill rate, which is 4.2%, as I mentioned. And with this kind of campaign, by the Noble Dollar, obviously you're holding it, it's in your wallet. Again, you're earning the 4.2% no matter what. But what we've decided is to give people two choices on what they could do with USDN. They could either put it in this vault where they get 14%, right? This is the boosted yield. The way that they get this boosted yield is because everyone that puts their USDN in the points vault gives up the 4.2% and it gets redirected to the boosted yield vault. So as you can see, it's 4.2% plus 9.8. That's only because all of these people in the points vault decided, I don't want 4.2%. I just want points, whatever points mean, whatever they end up being worth. I just want points. I don't want 4.2%. So those people are effectively giving up their yield to the people in the yield vault. And those people in the yield vault, they get the boosted APY, which is 14% right now, but they don't get any points. So as you can see, most people,
interesting.
yeah,
What is the utility of these points? How are you convincing people to make that trade-off?
we haven't said anything. We've just said there's points. We don't know what they are.
Interesting. Any ideas for how we can think about that in the future for people who have been excited to see what all these, I mean, there are a lot of points in this thing. What do you
Yeah,
think?
I mean, it's been incredible, to be honest. I'll be very honest. I have been very impressed with the growth, and this is all just retail driven. Like it's all just people that know us, like us, been following us. Yeah, so we'll see, right? But there'll definitely be like
It's kind of
something.
giving me cast energy a little bit with
Okay.
like how they've done their points,
Yeah.
because I know that that's something they're also thinking through and also a part of this season as well. So it's interesting as we are in this.
Yeah. It also Athena in the early days did kind of something similar. So like people have done this before, but I think like for us, one thing we've always wanted to maintain is like simplicity. So like even kind of the way I described it, like it's like one asset, it's just the Noble Dollar. The points get accrued actually technically off chain, but regardless, it's not like you're not like minting another token, right? Like everything will be convertible to, everything will kind of like be allocated to Noble Dollar holders as they are. And when they make a choice, it's either yield or points. Like that's all it is. It's not like,
Cool.
yeah.
It's probably a really interesting way for you to assess and track and see who has been the most loyal or with you the longest, or yeah, it's an interesting system. As we wrap up here, just a couple questions. I feel like as you're building this business, what is just a couple rapid fires? What is the most misunderstood or commonly misunderstood thing about Noble or what you're building?
That we are only focused on Cosmos. We're like very much cross-chain. We have routes to every major protocol, and with our app layer, we'll be fully EVM compatible. And so we'll be making a big push towards that ecosystem.
Just because of your background and history there. Okay.
Yeah.
What's the most underestimated part of what you're building? The thing that you think is secretly incredible that most people aren't thinking about yet?
Composable yield. It's
The
very
flywheel.
Powerful. Yeah, it's very powerful. And honestly, as a product, it does not exist at all anywhere actually right now. So it's something that we're excited for other people to like take advantage of.
That's amazing. And tell me from a team standpoint internally, as you look ahead, are you guys hiring? Are there any team needs? Does it seem like, yeah, like what, give us the next 6 to 12 months of headcount, team, maybe expansion, stuff
Yeah,
like that.
absolutely. Yeah, so we closed our Series A last year. So we finally had the resources to hire. So we started really ramping up hiring about mid of last year. We raised 15 million from Paradigm, and we've grown to 15 people. We are looking to hire, not kind of so much. Like we're not looking to scale super quickly from a headcount perspective. Honestly, there's so many tools out there that have like made us so much more productive and efficient, whether that's like AI or automation tools or what have you. So honestly, we want to keep it to like 20 or so for the next year or so. So yeah, a few more people on the marketing side and on the engineering side and on the product side.
What's the biggest AI unlock that you've been able, like when you say that, what comes to mind?
I mean, for me personally, honestly, like ChatGPT just for research, like I use it every day as like a research assistant effectively as like a tool to kind of like get feedback on different ideas. And then I think like for the engineering team, I know they use like a whole bunch of different tools.
It's pretty wild. 15 million with 10, 15 people a few years ago would be crazy, but
Yeah.
it's becoming more common.
Yeah.
Well, Yelena, thank you for the time. Absolutely a huge fan of what you're building and love the role that you play in this season. I think that we need more distribution, more people building at this layer, this level, the app layer. So I'm excited to see where you go and just really appreciate your time today.
Thank
This
you
was
so
fun.
much. So great to be here. Thanks for having me.